We have big news for Tesla stock investors. In fact, this is great news if you own Tesla stock. Elon Musk says he formally endorses Donald Trump for president in 2024. Ryan Cohen has also endorsed Trump for president in 2024. Tom Nash says Trump 2024. Stephanie Link says Trump just won. Bill Ackman endorses Trump for president. And why is this good for Tesla stock? You may ask. Well, let's go ahead and leave the political BS out of it. The last time there was a assassination attempt where a president was actually shot was Ronald Reagan in 1981, and these were the election results in 1984. It was a complete landslide. Now, again, that doesn't necessarily answer the question of why is this good news for Tesla? Well, it's good news for Tesla for multiple different reasons. One, it looks like it's almost guaranteed that Trump is going to win. And what does that mean? That means more rate cuts. That means lower odds of a recession. That means potentially more fiscal responsibility from the government. That could mean 10-year treasury yields may perhaps fall a little bit more. And as you know, Trump and Elon seem to be pretty close these days, with Trump weighing an advisory role for Elon. This could be someone Trump calls up to get advice about what to do, maybe with the economy. Now, the markets are perhaps going to price this in ahead of time, a Trump presidency, and that can have some favorable effects on markets in the near term. Perhaps that can mean lower 10-year treasury yields and overall lower odds of a recession in 2025, which could help our markets stay elevated. So hands down, a Trump presidency is positive for Tesla. And I know there's going to be some people that say, well, Trump, Republicans, they're going to get rid of the $7,500 EV tax credit. One, I don't think that is a big selling point at this point. It makes these vehicles more affordable, but still rates being cut more would do the same thing. So I think that argument is invalid. And I doubt the $7,500 tax credit is going to be taken away regardless. So I think that is really just an after show to what's actually going on with Tesla now. In fact, the $7,500 tax credit is, not even material in what's causing Tesla stock to rally right now in the first place. Right now, it's all about Tesla's upcoming earnings, but more specifically, the new models that are supposedly being launched by the end of this year, early 2025. If that is going to happen, I'm sure we get an unveiling of these on Tesla's upcoming earnings. I think investors are looking forward to that. And as well as that, the robotaxi event, which may or may not be in August. We still don't know. It still has not been confirmed by Tesla. And we'll probably learn new information on Tesla's upcoming earnings since we haven't learned anything so far. But regardless of whether that event is August 8th or October 10th, perhaps, I don't think it matters too much. And I think you've seen that on Friday after Tesla stock fell 8% on Thursday. You've seen Tesla stock recover over 3% on Friday. And investors realize, hey, this is really not a big deal if we have to wait 2 months for the robotaxi event. Maybe it's actually a positive for Tesla. Because maybe if they're delaying this event by 2 months, they weren't probably not actually ready for a knock your socks off event August 8th. The only thing that matters, as Dan Ives says, quote, we have a knock your socks off robotaxi event. The only difference is between, Thursday and now is you've gotten about a $23 better deal if you're in the markets to buy Tesla stock. And after this horrific event that took place this weekend, the deal looks sweeter for owning Tesla stock now. You may or may not recall if you were invested in markets. Maybe you don't recall because, average citizens do not pay attention to the Fed and what's going on with rates. But back in 2019, Trump threatened to fire Powell if he did not cut rates. And he did about 2 months later. So it's not like speculation to say a Trump presidency, we would get more rate cuts. That is like a definitive fact. And that is massively positive for Tesla because it makes Tesla's more affordable, even megapacks for that matter, that are heavily financed as well. That potentially means Tesla will not need to buy down as much of the interest rate. That means Tesla is going to potentially become more profitable than they have ever been before. The price of lithium has been falling for years. That's down like 70% from where it was in 2021. Tesla's COGS, their cost of goods sold, continues to come down. Their margins have been pressured because they've either had to buy down the interest rate or outright cut prices. And when that need to do that is gone, you're going to see profitability explode at Tesla. So yes, even a Trump presidency logically could cause Tesla estimates to go higher. And if Wall Street doesn't price that in now, that's something to look forward to in 2025. To say, hey, maybe estimates are far too low for Tesla in 2025 and 2026. Maybe the estimates come in way better, and you could have something like NVIDIA where everyone was wrong and Tesla, for this instance, well outdoes the estimates. And that means you could actually be buying Tesla for way cheaper today than you think. And that furthermore helps support the Tesla bull thesis at this point. So yes, leave the political side out of this. We're talking investments. We're talking money. I don't care who you vote for. I don't care who you like or which way you lean, as you should not me either. I'm just here to recognize what's good or what's bad. I do think at the same time as this is positive for Tesla, there can be a near-term negative if Biden were to theoretically step down. He did say recently the only way he would step down is if Jesus himself came down and told him, which looks highly unlikely at this point. But if the polls showed there was no chance that he could win, he would also consider stepping down. And it's too early to know what the new polls are, but odds are Trump's going to go up a lot in those polls. Again, history doesn't always repeat itself, but it usually does rhyme. And if it rhymes anything like 1984, then yeah, that could be problematic in the near term for markets. Because theoretically, if Biden were to step down and Kamala Harris or someone else were to step up and get that Democratic nomination, then that would cause more uncertainty for markets and potentially more volatility to the downside. Now, I do think in the near term, either way, you're likely going to see a correctionary rotation or just correction in markets, but don't be surprised if you do see stocks that may benefit more from a Trump presidency, like Tesla, like some small caps, financials, actually do okay during some kind of correction we could see over the next couple of months. And again, that's just because the future just got a little bit brighter for those areas. Again, assuming history repeats itself or at the very least rhymes. Now, before we get further into this video, I do want to share this clip with you. It's about 3 minutes long, the part that I'm going to share that says Tesla investors shouldn't fret a robo-taxi delay. This is Deepwater Assets Management, one of their analysts that covers Tesla, and this is his perspective, which I agree with for the most part.
Tesla stock has been on a tear. Its 11 consecutive winning sessions helped the EV maker regain all of its lost ground so far this year until today. Tesla's robo-taxi event, one of the drivers behind that stock's recent run-up, has reportedly now been delayed by 2 months, sinking the stock back into negative territory for the year. Joining me now is Doug Clinton, Deepwater Asset Management Managing Partner. Doug, it is great to have you on the show. So let's dive right into this headline, Doug. So reportedly, maybe Elon Musk thinking of delaying this robo-taxi event, Doug, to October. In your opinion, you know this company so well. Big deal? No deal? How do you see it, Doug?
Well, Josh, the first thing I would say is nothing is official in Tesla land until you hear it from Elon himself, because what sort of led to this event in the first place was a Reuters report several months ago that the Model 2 was going to be canceled. Elon said that that is false, and then he followed up saying that we're going to have a robotaxi event in August. We haven't seen Elon tweet anything yet. I just checked before we jumped on air here. He hasn't said anything about the event yet, so who knows what could happen. But let's say that the event is delayed, in fact, to October. In my view, what the stock has been doing more recently is it's been reflecting the hype and the excitement that investors are having for Tesla and what might come in terms of this robotaxi and what that ultimately might mean for the model. And Tesla, more than any other stock, is such a powerful religion. And I think that investors, as they see these new products coming, not just the robotaxi in October, but probably a few new vehicles as well, I think people are starting to figure out what could this mean to our models. And they were sort of front running potentially some changes in terms of how analysts and investors think about that business.
And Doug, when you talk about robo taxis, though, I mean, it's such a long-term goal in some sense, Doug. I mean, wouldn't it be a very long time before you would see any, real meaningful financial impact from that?
I do think that's probably realistic. And it's funny, I mean, going into the event actually, given Tesla's track record, but also just what they do. I mean, they solve really hard physical real world problems. And they're maybe one of the best companies in the world at it, but often their timelines are a little bit optimistic. They often miss their timelines. It's just a normal thing with Tesla. Going into this event, I sort of assumed whatever date they put on their launch of the robotaxi, you might want to add 6 to 12 months to. And then if you think beyond that, to the point of your question, Josh, when does it actually start impacting the model? Tesla has a really large business already in terms of selling cars. They obviously have several 100,000 FSD subscribers as well. And so the robotaxi business would have to get to a pretty decent scale to really start having some impact, meaningful impact on the model. So I think we could still be in a situation where even if the robotaxi launches, let's say late next year or early in 26, the real impact to the model might still be a few years beyond that. Even investors will start to discount some of that into the model, but we will have to be patient before seeing real numbers in it.
You see that? I started talking before I turned my mic on. I'm glad I realized that ahead of time. Next thing you know, it's 20 minutes later and there's no audio. But nonetheless, I do agree with most of what he said. I do think if the margins are as high as we think they will be for the robotaxi network, then let's say, just for, context, if Tesla does $100 billion of revenue, they're going to do more than that. I just want to keep it a round number. And they have maybe a 10% net margin. That's what, $10 billion of profitability. You take out your expenses and you're left with a smaller number, right? But let's say Tesla does $5 billion on the robotaxi network, only 5% of revenue, which it's going to be smaller than that over the coming years. Tesla's top line's going to grow. But let's say margins are 40 or 50%. That could be $2 to $2.5 billion of profitability to the bottom line. That could be, impactful to the model, even on a very small overall scale. So it really depends on profitability and, the vehicles that Tesla uses from, their fleet, right? The Tesla owned fleet may perhaps have lower margins than if you turn on your Tesla and allow it to do FSD, then Tesla's just going to get the, profit sharing from that. So there's multiple different ways to look at it, but I think that's enough of an impact in and of itself to continue to drive momentum in Tesla on top of everything else that we have going for Tesla. And then you have the prospects of a Trump presidency that just went from like 65%, I would say, before this event to like 90%, 85, 90% now. And that's kind of the cherry on top, even in the short term, that could cause Tesla stock to continue to outperform. And again, I still think we're vulnerable for a correction here, but don't be surprised if financials and automakers and super interest rate sensitive companies that are also high quality, that are low on debt, that are profitable, can outperform and continue to do well, even if we do go through a correctionary period. Now let's get into all of your Tesla stock data and information that you need to know. First and foremost, it's worth mentioning improved a little bit for Tesla. Yesterday, you were extremely bearish at 18. Today, you're still extremely bearish at 20, but that's a little bit of an improvement. Message volume today is high at 68. Yesterday, it was high at 70, and the participation ratio today is normal at 54. Now, I do think the reason sentiment is so bearish from retail investors right now in Tesla is because I think a lot of retail were not expecting this large of a rally. They were caught off sides. A lot of retail was trying to time Tesla and, not just with options, but like time their whole positioning. People were selling out in the 150s, 160s, hoping for the, hundreds. And you only ever fell to $138. A lot of people did not get back in, in the 150s, 160s. They didn't get in at the 200s because they thought for sure it was going to fall back to the 180s. And then people didn't get in the 250s because they thought for sure it was going to fall to the 220s again. Then it went to 270, went down to 230. People are like, oh yeah, it's going back to 200, maybe 180. I've seen a lot of those comments. And now it's back to 150. Right? So I think a lot of retail were really caught off sides here. I think there was some small short covering. Yes, that did play some kind of a role. And we'll look at that data here in just a second. But a lot of this was options fueled by big money, specifically options by big money, and a lot of big money repositioning in Tesla. So I think a lot of retail just missed some of the rally that we've seen. And it will continue to drive Tesla stock higher as more retail gets back allocated to Tesla. But right now, with retail so bearish, seemingly on Tesla, looking at this stock twit sentiment gauge, that does give me more confidence that Tesla has a lot further to run from here. And yes, I do believe Tesla still will hit all-time highs by the end of this year. If we take a look at Tesla's short interest of free float, you've went from about 3.83% short interest of free float down to 3.8%. So yes, Tesla's rallied a lot. There has been some minimal short covering, but only about 1 million shares on net, because you get people that cover on their positions, short positions. You get firms that take out short positions. So on net, you've only had about 1 million shares actually cover so far, which just goes to show how much of a larger rally potentially we could see if you even see 20 million more shorts cover. Right? That could continue to help drive Tesla stock higher. Now, currently you have $25.37 billion currently sold short in Tesla, one of the most shorted stocks on our markets. On Friday, you had return shares of about 4.18 million and borrowed shares of about 908,000. So on net, you did have about 3.3 million shares that were actually covered on Friday. That was the largest short covering day that we have seen for Tesla throughout this latest rally. But at the same time, on Friday, some of these institutional trades that are coming through on the interesting flow sentiment over on Ortex are, pretty bearish. You do have 45 different orders on Friday, totaling $30.12 million, with a positive order value of 17%. Now, a lot of these trades that came through specifically in the last 10 minutes of trading or so are these July 19th, so this upcoming Friday, 250 calls, this worth $304,000, $155,000, $116,000, $360,000. This one is a July 19th 220 call with a break even around 250, worth over $1 million. And there are many other trades like that. And it seems like hedge funds and institutions for this Friday are targeting an even larger rally ahead for Tesla stock. And we'll take a look at the bubble chart and where the options are actually sitting in the next video. We'll go over that more in depth, my expectations for this upcoming week, specifically what I think will happen with Tesla stock. But yes, you are seeing a lot of bullish option activity for Tesla. For context, over the past week, you had 278 orders coming up on the interesting flow sentiment. These are big money trades, totaling $169 million with a positive order value of 70%. So hedge funds and institutions are quite bullish on Tesla stock. And that's kind of a flip-flop from what we have seen recently, where mostly it's retail that's bullish, hedge funds and institutions are big money is bearish. Now it's big money is getting bullish and retail is feeling bearish again, because I think a lot of retail sold out and missed a lot of this rally. But retail will get back in. Don't be confused there. And remember, just always remember this, from a retail investor to another retail investor. Really the only advantage we have as retail is we're able to buy and hold. A lot of big money does not do that. A lot of big money has clients. They have to book profits. They, need to get bearish or bullish at certain times that are advantageous for them. But the biggest advantage we have is the ability to buy and hold. And when your favorite stocks go on sale, I said this on X recently, You want to buy those stocks like a kid in the candy store with unlimited money. You want to accumulate as much as possible. If we go ahead and take a look at Google Trends data, you do see the Cybertruck coming down quite a bit to 59. The Model Y that's falling a bit from 26 to 23. The Model 3 that's also falling from 25 to 23. The Model S going from 12 to 10. And the Model X going from 9 to 8. But still overall, decent levels of trend activity for Tesla products. For full self-driving, for the first time in a long time, you're actually seeing this back down to 16. Now, this data is not final. The last final data we had was a 20 number, but 16 is more in line with, I mean, still high, but more in line with where you were before this free trial for FSD did start. So if these numbers are to be believed, then maybe the take rate is slowing down for full self-driving, and perhaps that means maybe some more incentives to bring that take rate back up could start coming out. Maybe that is a price cut to FSD. Maybe that is another, 30-day trial or so. Tesla continues to run about 4,000 different ads with Google. And if we take a look at Tesla's inventory numbers, the Model Y at about 5,300, the Model 3 at 4,000, the Model X at 3,400, and the Model S at about 2,800. Now, we will talk about this a little bit more in depth as well, but you have started to see the 10 and 2-year yield curve inversion start to rapidly uninvert. Now, usually when this happens, it's not a great period for markets. Some of the last inversions we've seen were September through late October of 2023. I mean, if we take a look at that period in time for the S&P, September through October of 2023, yeah, it was a kind of rough period for markets. You ended up falling from the peak to the low about 10%, and that does tend to correlate with what you see with a 10 and 2-year yield curve uninversion. That's because when you uninvert, that's actually when you tend to be going into a recession if you look at history. But again, we'll talk about that a little bit more in the next video. We also had a pretty rapid fall into the close on Friday, and that needs to be discussed more in depth in the next video as well. Now, also in the next video, I will go over the positioning for Tesla heading into this week, all of the major events you need to know that start off tomorrow morning with a speech from Fed Jerome Powell that will likely move our markets. But yes, something pretty significant did happen towards the end of the trading day on Friday. Good news is, as of recently, you have really started to see the participation in our markets start to increase a lot. The breadth of this market has gotten much, much better. The percent of stocks currently trading above their 50-day moving average is now at 63.3%. Just a couple of weeks ago, in late June 25th, you were sitting at about 35% of stocks trading above their 50-day moving average. So now you're seeing the majority of markets actually in an uptrend again. Which, if you are a contrarian, perhaps that was a sign maybe you've been looking for to say we could go into a correction. Once you do start to get the broader markets participating, maybe that could be a negative sign as much as it is a positive sign. But again, more details on that in the next video. And Tesla stock on a technical basis, you have seen the RSI reset back to 69, which was actually great. I said this in prior videos, but you really needed to see a little bit of consolidation or a pullback. I said about a 5% pullback was likely between now and Tesla earnings. And in fact, from the highs to where you are now, you've still seen about an 8.6% pullback. That is from, $171 per share down to where you are today at about $248.76 per share. You've seen about an 8.5% pullback, call it that. I think you've seen that correction, if you will, in Tesla that you needed to see before Tesla earnings. Now, the biggest thing for Tesla earnings specifically is whether or not we get new products that are unveiled. If we don't get new products unveiled, you could potentially see a larger sell the news or sell the event reaction for Tesla stock, but that is still yet to be seen. Nonetheless, resetting the RSI back to a more normal level of 69 rather than where it was before at 87 is definitely good from here. You can, you know, hit higher highs of this rally without the RSI hitting 87 again. Perhaps if Tesla stock hits a, you know, over 271, hits a new high for this cycle, you could see the RSI at like 75, maybe 77. Not as overextended as it was. And this is what happened with NVIDIA. You would hit these extreme overbought levels, you'd get a sharp drawdown, and then you'd get the stock retaking new all-time highs. And the RSI was not as high, right? The relative strength was not as high. So it allowed NVIDIA to keep going higher. And I think that's a similar scenario you are currently in for Tesla stock. Now, the MACD still looks very strong at 20. The signal line is at 15.96, and the histogram is at 4. So very solid inflows you're seeing. Overall, a lot of strength. So looking forward to that continuing. No signs of that really stopping. You've kind of started to trade sideways on the MACD, but I imagine that's going to start going up again. The biggest thing that really matters, if you were to pick out one thing on the technicals, is this longer term downtrending trend line. Just because Tesla reacts so much to technicals, I've never seen another stock that, you know, follows the technicals so close as Tesla does. You really just want to stay above, at this point, about 227 or so. If you stay above that, you're good. I don't care if Tesla goes down to, you know, 228. As long as you stay above 227, you know, minus any correction, and maybe short term you could get back under that level. That's all that really matters here, right? Above that trend line, you are in a very bullish uptrend. You do not want to fight Tesla above 227. And as time does go on, this trend line starts to fall and the bar gets even lower. So for an example, by September, this trend line is going to be sitting at about 212, right? Just by September. So by September, Tesla will only need to be above 212 to still be incredibly bullish. Now, I think by September, Tesla's going to be well into the 300s. But again, that's just for context here. You don't want to bet against Tesla. I think that's just not a good idea right now. Obviously, I'm not a financial advisor. I could be wrong. Maybe Tesla collapses. Who knows? But it looks really good that the rally continues for Tesla, especially in light of the new developments over this weekend. So that is going to go ahead and do it for this video. Hit that like button and subscribe to the channel. Let me know what you think about this information down below in the comment section. You guys have a fantastic rest of your day, and I will see you in the next one.